All right, let's dive in. We're taking a deep look at Indigo Paints and their second quarter performance for fiscal year 25. And, you really hooked us up with this info. We've got the annual report. We've got the earnings call transcript, the earnings call recording, presentation slides, even a YouTube video breaking it all down. So, we're going to go beyond just what the headlines say and really try to understand what this means for someone like you. Clearly, you're someone who likes to keep up with this whole sector. So we're focusing on 6 key areas just to kind of, give us a roadmap. We'll be looking at the industry overall, how Indigo's business works, a deep dive into their financials. We'll look at who's running the show, the leadership, and then a realistic look at what risks they're facing. And of course, got to talk about where they're headed, their strategy for the future, all that good stuff.
Sounds like we've got a full plate.
We do. But that's what makes these deep dives so interesting,
Right.
like solving a mystery. So first things first, let's zoom out and look at the big picture. The Indian paints and coatings industry. Indigo's annual report, it really paints a pretty optimistic picture. They're predicting a compound annual growth rate, CAGR, of 7.44% all the way until 2030. Now, that's a market worth billions, seriously, billions. And get this, a huge part of that growth is driven by waterproofing solutions, which, come on, we all know how important that is in India with the weather and all.
Yeah, it's not just about looks, just slapping on a coat of paint to make things pretty. This is about protecting stuff, serious stuff, like infrastructure. Think about it, your house, huge projects like, the Versova Bandra Sea Link in Mumbai. All of that relies on these coatings to hold up against the elements.
Yeah, you're right. It's easy to forget that paint actually does so much.
Mm-hmm.
It's not just cosmetic. Okay, so now let's zero in on Indigo Paint specifically. They're playing in the organized sector of the decorative coatings market, which their annual report says will almost double in size by 2032. Double. But, there's always a but. There are a ton of smaller companies, but a handful of big ones really control the market. So, yeah, Indigo's definitely facing some stiff competition.
Oh, absolutely. And that's why their strategy is so crucial. Their annual report lays out what they call Strategy 2.0. It's all about focusing their expansion efforts on Tier 1 and Tier 2 cities. Think of all that construction happening in those big urban centers. That's where Indigo's putting their chips down.
Makes total sense. Got to go where the growth is, right? And while we're talking about growth, their product range, it's pretty impressive. They've got everything. Emulsions, enamels, wood coatings, primers, you name it. It's like they have a paint for every surface imaginable.
That's smart. It lets them reach a much wider range of customers. Some of their competitors, they're more niche, focused on just one type of coating. It's like Indigo wants to be your one-stop shop for all your coating needs.
All right, enough of the big picture stuff. Let's get into the details of Q2 FY25. So digging into the earnings call transcript and recording, we see their revenue went up by 7.4%. That brings it to a total of INR 299.5 crores on a consolidated basis. Sounds pretty good to me.
It is, but we got to look at the profitability too, not just the revenue. Standalone profit after tax, PT, that actually went down by 7.7% to INR 24.1 crores compared to the same quarter last year. This brought the standalone PT margin down to 8.2%. It was at 9.6% before. And the consolidated PT margin, that came in at 7.3%. I know, it's a lot of numbers, but stick with me.
Yeah, those dipping margins, that does make you wonder a little, should we be concerned?
Not really, actually. Remember that new plant they opened in Tamil Nadu? Well, both the earnings call transcript and the recording, they point to those increased depreciation costs from that plant as the main reason why the PT margin is lower. It's like a one-time hit, from getting that plant up and running. It should even out starting in the third quarter. So don't worry, no need to panic yet.
Yeah, that's good to know. You always got to look a little deeper, right? Now, every company needs good leadership. And from what the CEO said in the earnings call, Indigo seems to have that. They're being very strategic, really emphasizing careful purchasing and pricing strategies, even with all the craziness in the market right now.
Yeah, it shows they're prioritizing profitability, not just chasing after market share no matter what, which in the long run, that's the way to go. It's more sustainable. It's like they're playing the long game.
Smart. And they're not just sitting back and letting the competition catch up either. The CEO made a point of saying they're committed to protecting those unique products they offer. But they're not just relying on lawsuits and stuff to do that. They're doubling down on brand building and consistent advertising. Really getting their name out there.
That's interesting. It shows he really understands the market. He actually said that competitors have tried to copy their products, the Me Too approach, but they haven't been as successful. And he thinks it's because they haven't matched Indigo's marketing push. Especially for those niche product categories, those might not be as important to the bigger companies.
So it's not just about making good products, it's about telling a good story too, right?
Hmm.
That marketing can be just as powerful as any patent.
Oh, absolutely. But even with the solid strategy and strong leadership, there are always challenges, and Indigo Paints is no exception.
Yeah, it's true. Even the best companies hit bumps in the road. And for Indigo Paints, one of those bumps, like we talked about earlier, is those raw material prices. They're all over the place. It's like trying to catch a butterfly, you know. If those prices keep going up and down and Indigo can't manage them, it could really hurt their profits.
So even with their careful purchasing, that's something they'll have to watch closely for sure. What else is out there that could be a problem?
Well, competition, it's tough out there. The Indian paint market is packed, especially in the organized sector. Indigo has a good brand, but they can't just sit back and relax. You know, they got to keep innovating, keep their marketing fresh, and stay ahead of the trends.
It's like walking a tightrope, right? Always pushing forward, but got to be careful not to fall. Exactly. And then there's that skilled labor shortage. It's a problem for everyone in the industry, not just Indigo. If they can't find and keep good workers, it could really hold back their growth, and it could make it harder to keep things running smoothly. But, like we saw, they're tackling this with those training programs and offering competitive salaries.
So they know the risks, and they're trying to do something about them. That's good. Okay, enough about the scary stuff. Let's look ahead. What's the future for Indigo Paints? What have they said about their plans and expectations? What's the management saying?
Well, they're definitely feeling good about things, that's for sure, based on what they've been saying. They expect to keep growing, driven by their expansion into new markets and their focus on innovation and just running a tight ship overall. They're trying to balance that strategic growth with running things efficiently.
Makes sense. Got to have
Well,
both, right? What about numbers? Any specific financial targets? Have they given any hints?
they haven't said exactly what they're aiming for in terms of revenue or profit, but the CEO did talk about some key things, like remember those big capital expenditure plans? Well, he said they don't expect any major capex for the next 3 to 4 years once those projects are done.
So it's like a period of investing and then a focus on making the most of what they built. Like that saying, build it and they will come, but for paint.
Hmm, that's a good way to put it. It shows they're confident that those investments will pay off and that they can use all that new capacity to grow the business.
Okay, so we've got a sense of their plan, but things change fast in business, right?
Mm.
What should we be watching for in the coming quarters to see if they're on track? What are the signs of success or, trouble?
That's the big question. The first thing, we got to keep an eye on their revenue growth. Is it keeping up with the industry overall? Are they gaining market share, especially in those tier 1 and tier 2 cities they're focused on? That's how we'll know if strategy 2.0s are working, if they're growing in the right places.
So it's not just about growing. It's about growing smart, in the right spots. What else should we be looking at?
Profits, of course. Are they managing those raw material costs well? Are their margins staying steady or even getting better? We want to see if those careful purchasing strategies and their pricing, if it's all working.
Yeah, margins really show you how efficient they are, how well they're running the business.
Speaking of efficiency, what about those new plants they're building and all that extra production?
That's key too. As those big capital expenditure projects wrap up, we got to see if they lead to real improvements, and how they operate. Can they make production cheaper? Can they get their logistics running smoother? Those are the things that can really boost their profits.
So we're looking for proof that all that investment is actually making a difference. What about their cash flow?
Ah, cash flow, the lifeblood of any business, especially one that's growing. We want to see if they can turn those profits into actual cash. Strong cash flow, that gives them options. They can invest more, try new things, even give back to their shareholders. It's a sign that they're healthy and can keep going. Now, beyond just the numbers, anything else we should be paying attention to?
Oh, for sure. The competition, it never sleeps. How is Indigo standing out from those bigger companies? Is their marketing working? Are they attracting and keeping good people? These things, they matter just as much as the financials.
It's about seeing the whole picture, not just the numbers. So for our listeners, for everyone who's been with us on this deep dive, what's the main takeaway? Why should they care about all of this?
Well, Indigo Paints, they're an interesting story. They're trying to make a name for themselves in an industry that's growing fast. They're dealing with the same problems a lot of businesses face, costs that are unpredictable, tough competition, and not enough skilled workers. But they're also going for it, expanding in a smart way, and focusing on doing new things. Their story, it's a good lesson for anyone who wants to understand how businesses succeed, even for people who might be thinking about investing.
It's a good reminder that business isn't just about the numbers. It's about the people, the plans they make, and being able to change and overcome those obstacles, those bumps in the road.
Well said. And as we finish up this deep dive, I want to encourage our listeners to keep digging, keep asking questions, and don't just assume things are true, really challenge those assumptions. The business world is always changing. The only way to keep up is to stay curious and learn as much as you can.
And that's what we're all about here on the deep dive. All right, so we've talked about a lot of potential good stuff, but let's be real for a sec. What about the risks? Every business has them. What could trip Indigo Paints up?
Well, that volatility in raw material prices, it's a big one, like we touched on earlier. It's like, you're trying to build a house, but the price of lumber keeps changing every day. If Indigo can't handle those price swings, it'll eat into their profits, no question.
Yeah, so even with the careful buying strategies, they got to stay on top of this for sure. What else?
Competition. Always got to think about the competition. The Indian paint market is crowded. There are a lot of companies vying for those customers, especially in the organized sector. That's where the big boys play. Indigo, they've got a strong brand, but they can't just sit back and relax. You know what I mean?
Right, right. Got to keep pushing, got to stay hungry.
Exactly. Got to keep innovating. Got to make sure their marketing stays fresh. Got to stay ahead of the trends. That's how you win in this game.
It's a balancing act, isn't it? Got to keep moving forward, but got to be careful not to stumble.
Yeah, it is. And then there's that skilled labor shortage we talked about. It's not just an Indigo problem, it's everyone in the industry, not enough skilled workers to go around. If Indigo can't attract those workers and keep them, it could really limit how much they can grow. And it could make it harder just to keep things running smoothly day to day. But hey, at least they're tackling it head on, like we saw those training programs, competitive salaries. That's a good start.
Okay, so they know the risks. They're not ignoring them, and they're taking action. That's good. But enough about the doom and gloom. Let's look ahead. What does the future hold for Indigo Paints? What kind of guidance has the management given, about their plans and what they expect to happen?
Well, they're definitely optimistic based on everything they've been saying. They're projecting growth, continued growth, driven by a few things, expanding into new markets, reaching more customers, focusing on innovation, coming up with new products, and making their existing ones even better, and just running a tight ship, operationally speaking. They're aiming for that sweet spot, smart growth and efficient operations. That's the winning combination.
Makes sense. Gotta have both. What about specific financial targets? Have they given any clues about the numbers they're aiming for?
They haven't said specifically what they're shooting for in terms of revenue or profit, but the CEO did highlight a few key milestones. Remember those big capital expenditure plans we talked about? He said they don't anticipate any major capex for the next 3 to 4 years once those projects are done.
So a period of heavy investment, and then, boom, focus on making the most of what they've built. Like, okay, we built it, now let's make it shine.
Exactly. They're putting their money where their mouth is. They're confident those investments are going to pay off. And they believe they can use all that new capacity to really drive growth.
Okay, so we've got a roadmap, a sense of where they're headed, but, things can change quickly in business.
Yeah.
What should we be watching for in the next few quarters to see if they're on track? What are the signs, the signals that tell us if they're succeeding or maybe struggling?
The million-dollar question. Well, first and foremost, we got to keep an eye on their revenue growth, top-line growth. That's crucial. Are they growing as fast as the industry overall? Are they taking market share from their competitors? Especially in those tier 1 and tier 2 cities they're targeting, that's where the battle is won or lost.
So it's not just growth for growth's sake. It's got to be strategic growth in the right markets. Got it. What else?
Profits. Always got to watch the profits, the bottom line. Are they managing those crazy raw material costs well? Are their margins holding steady or even getting better? Those careful purchasing strategies, that strategic pricing, we got to see if it's all working.
Yeah, margins are like a report card. They tell you how efficient a company is, how well they're managing things. Speaking of efficiency, what about those new plans? All that increased production capacity, is that making a difference?
Another key area to watch for sure. As those big CapEx projects come online, are they leading to real improvements in their operations? Can they bring down production costs? Can they streamline their logistics, get those products moving smoother? Those are the kinds of things that really boost profitability, make a real impact.
So we're looking for proof that those investments aren't just money down the drain. They're actually making things better. What about their cash flow?
Cash flow, the lifeblood of any business, especially for a company like Indigo that's in growth mode. We want to see if they can turn those profits on paper into cold, hard cash. That's what matters. Strong cash flow. That gives them options. They can invest in future growth, explore new ideas, even reward their shareholders.
Yeah, it's like a sign of financial health. Shows they can keep going, keep growing. Okay, so we've covered the numbers, but is there anything else we should be paying attention to? Any other factors?
Oh, absolutely. The business world, it's like a jungle, you know? The
Yeah.
competitive landscape is always changing. You got to adapt to survive. How is Indigo setting themselves apart from those big established players? Is their marketing hitting the right notes, resonating with customers? Are they attracting top talent and keeping those talented folks happy? These things, they're not always in the numbers, but they matter just as much.
It's all connected, right? You got to see the whole picture, not just one piece of it.
Yeah.
So for our listeners who've been on this journey with us, this deep dive into Indigo Paints, what's the big takeaway? Why should they care?
Well, Indigo Paints, they're a fascinating company. They're trying to shake things up in an industry that's booming. They're facing the same headwinds a lot of businesses face, those unpredictable costs, the fierce competition, and the struggle to find good workers. But they're also making bold moves, they're expanding strategically, and they're laser focused on innovation. Their story, it's a great lesson for anyone who wants to understand how businesses succeed, even for people who might be thinking about investing.
It's a good reminder that business isn't just about spreadsheets and numbers. It's about people and the plans they make and how they adapt when things get tough.
Couldn't have said it better myself. As we wrap up this deep dive, I want to encourage our listeners to keep exploring, keep asking those tough questions. Don't
Yeah.
just take things at face value. Challenge those assumptions. The business world, it never stands still. The only way to keep up is to stay curious, to stay informed.
And that's what we're all about here on the Deep Dive, helping you understand the world of business. We hope you enjoyed this deep dive into the world of Indigo Paints. It's a colorful one, that's for sure. Until next time, keep learning, keep growing, and keep diving deep.